Alright, good morning ladies and gentlemen. Today we're going to show a very exciting cases. With money in your pockets, have you ever dreamed about being your own boss and become an entrepreneur? Build up your own company and maybe once become a Facebook of the next. We're going to show a very exciting cases because once Newton says, the great success should be standing on the giant's shoulder. We're going to introduce a new company to you which can help you build on the foundation of the others and achieve your own commercial success. With that, I would like to talk a little bit about today's agenda. So we're going to first look at the industry and the business model of this company. And we're going to identify the key issues, especially the key success factors in this sector. And we'll talk a little bit about the company's background. And then we will carry out on the actual business company analysis. We're going to focus on its strengths, its weaknesses, its current position, and how it can become better. And then we'll of course talk about the risk factors, both of the existing business and about our new business plan. And lastly, but not leastly, we believe that Hong Kong, as the pearl of the origin, should be a bigger part of the Greater China. So we're going to talk a little bit about how to expand into Greater China and help more people of the 1.3 billion people to achieve their success by standing on the shoulder of the giants. With that, I will pass the stage to my teammates to start the analysis part. Thank you.
Thank you, Ricardo. So firstly, we're going to look at what is the business model of a business brokerage. Actually, the term is relatively a nascent concept in Hong Kong with only the relative market size of a small one of 7.760 million. However, this concept is not difficult at all, just like us buying property that we have seen very commonly. So firstly, suppose Mr. Chen is the owner of the salon and he wants to sell his business. So let's follow the timeline. What will he do? He will first contact a broker, and the broker will talk to him to understand his business and then look at his statements to see how the business is doing, to verify whether the business is exactly what the seller is talking about. And then after these due diligence background check, to confirm what the asset is, what the business is putting on sale. Next, the broker will advertise for buyers of the business on sale. So after this process, and after securing the buyer's interest, the two parties will enter into a negotiation to finally come up with a decision to buy this business or not. So the broker will charge the brokerage fee from both sides, both the seller and the buyer, for the service that it provides. So on a more basic term, the broker will provide a service such as verifying the business on sale and sourcing buyers. That is the minimum that they can do. So they can do this to charge the seller side. And if they want to do more to provide more value-add business, they can add on to offer some business operation advice to the sales side to make the business a better one, to be sold at a premium. And then they can also offer the business to the buyer of the minimum information about how the business operating that is being put on sale, what's the business, how it's like at the minimum, to charge a basic duty for a basic fee. And then if they want to go a step further, they can also provide some value-add service such as financing arrangements so as to charge a premium price. So that's basically how the business broker business model is like. So we have to understand some key characteristics of this business brokerage model before understanding what are the key success factors to be prominent in this industry. So number one is the famous inherent conflict of interest that is in the role of the broker. So from the side of the seller, of course they want to sell their business at the highest prices possible. So they may have the intent to hiding some key information and risk of their business. And on the buyer side, of course, they want to get the greatest bang on the buck and to get the best bargain for the best thing. So they want to pull down the price. And only the broker is the fully informed party, and it has the capability, even though they may not do so, they have the capability to profit from the difference of the actual worth of the asset and what the buyer is paying. So this is something that both seller and buyer will keep in mind when they are making the choice of their broker. Another characteristic of this industry is the volatility of the revenue of the brokerage firm. So firstly, we can see that the supply is volatile. The number of business being put on sale is a volatile number. We get this from the proxy of the rate of entrepreneurship in Hong Kong. So we can see that in the good years, 2007, we can see that there's a high rate of entrepreneurship. But when the market turns down or when following different stages of the business cycle, the number of business being put on sale is varying greatly. So when supplies decrease, it's less likely to be able to form a transaction to match both sides. And there's also volatility in the buyer's interest. When the economy is good, one is richer and has a higher purchasing power to buy, and when the economy is low, is in a downturn, people would like to get the flight for safety and would not, for example, to buy gold or some fixed interest product instead of investing in business. So when the economy is fluctuating, it greatly impacts the broker business by affecting the possibility of getting the buyers and sellers' interests matched together. Another third issue is the scalability problem. Brokerage is a people-oriented business. Even you are just providing a basic service, you have to have the manpower to source both the seller and the buyer, and it takes time and great interpersonal skills. And if you want to charge a value-add business model, you have even to have people with great business management expertise, have the legal counsel, have the accounting people to put together in a team to look at how this business is like, how much it should be sold. So all these is greatly dependent on the people. It's a potential limiting factor to the industry's growth. So after reviewing the industry and all its key characteristics, we believe that there are three key success factors to be bear in mind when one wants to gain long-term success in this industry. Number one is trust. You have to gain both the buyer and the seller's trust when they know in mind that you have this the role of conflict of interest that is inherent in your role. You have to gain trust of the buyer and the seller so that they can trust you and then put the business together and do the transaction through you. And secondly, you also have to maintain a large supply and stable supply of the pool of potential seller and buyer so as to hedge against the volatility of the economy and not to affect your bottom line in a volatile way. And thirdly, you should also contemplate the opportunities of expanding into the value-add business so as to charge a higher premium and to contend on the price competition. So with these key success factors and natures of this industry bear in mind, I'll pass on to Ricardo to continue to talk about how our company is performing and how it can gain long-term success.
Thanks, Claire. So after seeing this business, I guess all of you have a sense on how to build on your successes on other people's foundation. We have this company called Business Intermediary, which is our client company, and they are currently, very excitedly, both the first mover and the market leader, with around 60% of the market share. However, this company is not without problems, even though they are the leaders and they are the initiator, the first movers. And we can see that actually a lot of competition actually comes from the ex-employees. They have the experience, they have the knowledge about this industry. They just move out, start up their own company, and mainly competing on prices. This put a lot of pressures on our bottom line. So we think that one major counteract to solve this issue is to have better employee retention rate. We believe that for employee to go out and start their own business, there are mainly two concerns. First of all, the compensation is not attractive enough, and they believe they can make more money outside by operating their own. So we think that they should have a shareholding scheme to share the equity with the employee, both to align their interests and give them more incentive to perform well. Secondly, some of the employees are as entrepreneurially spirited as our founders do. They might just want to have their own business since they are doing this kind of business in helping other people building up business every day. So we think that for this kind of people, we need to offer them a different kind of attractions is to retain them in a company. Luckily, we have a private equity company, and we have a lot of double checks to both either to check the company or to purchase a company, run it, restructure it, and sell it. So we believe that by relocating this entrepreneur-spirited employee to these departments, we can help better maintain them in the business, helping us to build our success instead of adding one more competitor for our company. Next slide, please. And of course, we believe there are other training programs that is also valuable. And we believe that the second main issue is the increasing competition. Originally, when we started up the company, there was no competition in this market. It was a blue sea. However, with the blood bleeding, more and more companies entering into this field is now a red sea. And we think that, as we have mentioned before, the key success factor is, first of all, definitely the trust. Luckily, we have some strengths on this regards. We can look at this table and see that, first of all, we have a very industry-leading deposit system. Whenever the buyer pays the payment, we'll only give 70% to the sellers for the first time. If there is some problem, we will retain the 30%. This helps to secure and incentivize the buyer to tell the truth and only sell the good companies. Secondly, we have a great reputation on this industry. As the first mover and a very conservative company, we have 70 to 75% of success rate for all the company we have sold out, and they have a long-lived life. Also, we have a great reputation for being transparent. Everything was put online, both the buyer's information and the seller's information. So there was no room for arbitrage in between for the prices differences. We also believe that a database about the seller and the buyer is incredibly important, because by data mining on this data, we can find out the pattern of the purchaser, and we can also find the pattern of the seller. And we currently have around 100,000 customers on our customer basis. We believe this is a great pool of valuable resources that haven't been utilized to its full potential. We're going to discuss more on this on the suggestion part. And lastly, we believe that we are the only one to offer integrated services. When you want to purchase a company, you are smart enough, like the judges here, however you don't have enough money to purchase that company. We can offer you 50% of the financing with a term of 12 to 36 months with the assets of the seller's company as backup security. And we will also offer 2 years training for post-deal consulting to help you restructure the company and reap more profit out of it. We believe this is very unique, hard to compete, and hard to mimic, because all of this not only require cooperation with banks, good relationship with seller buyer, you also have to maintain a whole pool of expertise who can help you actually provide valuable consulting services. And lastly, but not leastly, we also have property service, which was a new business initiative to help the buyer and the seller find a better places, especially considering the rental fee and the high cost of rental here in Hong Kong. We believe this is also a competitive edge for us. Next slide, please. And the next big question for us is, this is a very cyclical industry. When the industry was booming, there is a lot of entrepreneur and there is a lot of demand to buying this company. However, when the economy is bad, we're going to be hurt very badly, as we have shown before. The company itself have proposed to enter into the real estate and property market as a counteract. The founder, Mr. Lee, claimed that when market is good, the rental price is going to increase, so the seller have worse profit and worse bottom line. However, Mr. Lee believed that he can increase the profit by owning these properties because their price is going to rise. However, we seriously question this, because in the downturn, not only less supply from the market of the sellers, because many of the sellers will be losing money. Although they want to sell the company, that won't be a very good asset to sell. And the company have a philosophy that we will never sell a company that is not generating profits. So we believe that the supply side will decrease. Also, as mentioned by Claire before, the demand side will also increase in the downturn. And obviously, when economic hits, the real estate market would go into a downside as well. So we think that this might not be a perfect hedge, as Mr. Lee have claimed it. However, we do believe that adding on property services is a value-adding part and offers us a competitive advantage. Our suggestion would be, we will only act as a broker and not taking actual positions by investing our own money into the property markets. And we also don't have the expertise anyway. We will also have a new potential initiative, which is, if the industry is really bad and we really want to maintain the consultant pool, which are excellent and experienced, hard to retain in later time, we believe we will have a business plan in places. If the economic is really bad, we will have a separate fee-based consulting service to help restructuring those companies who is suffering a negative bottom line. Next slide, please. With that, we would like to propose our overall strategy for the Hong Kong domestic markets. First, it's definitely a differentiating strategy because we have all the uniqueness, position, and strengths that all our competitors doesn't have for the moment. So we're going to focus on providing one-stop services. You have a brilliant idea, you have a smart head, you can just come to us. We help you do the financing, we help you do the restructuring, help you do the training. And we'll also leverage on our existing data, not only to leverage the customer pool, but also to find out more patterns and add more value to the customers. And with that, we believe that for Hong Kong market itself, we will continue to be the market leader and will grow even stronger, facing in 3 or 5 years term, because we're going to be the only provider that can have all the services integrated in one stop. With that, I would like to conclude and hope you enjoyed that. And we'll pass the stage to my teammates to talk about the next step, how to go beyond Hong Kong and become a bigger part and help more people to achieve their success. Thank you.
Thank you, Ricardo. Before we go to the expansion part, I'll talk about the risks briefly about on the environment that HKBI is operating. The first risk, as discussed before, is the shortage of supply, because on the one hand, entrepreneurship and activities are dropping in recent 2 years, and on the other hand, the sellers are difficult to locate by nature. So in conclusion, we want to broaden our customer base, which will be talked about later. The second risk is the conflict of interest, as this company runs both the brokerage business as well as a PE arm. There is an inherent conflict of interest. So we want to enforce the Chinese law and establish a compliance department. And another one is the change in Hong Kong's legal landscape, as the non-competition law is to be rolled out at the end of this year. So now I pass the time to Jimmy.
Okay. So, actually, after talking about the internal strategies we are going to implement for HKBR, our team is dedicated to suggest to our client some innovative solutions to further expand and develop their business. And here are our yardstick in deciding whether this is a good business to enter, which is the relevance to the core business. Because HKBR has previous experience in failure in diversifying its business out of its core business, so it's really need to bear in mind. Also, we will also have a relocation yardstick because the company owner would like to first focus in Hong Kong, then expand its business to another part of the world. So, first of all, we'll talk about the value-adding consulting service. As you can see from this diagram, is that actually the consultants have extra capacity during the economic downturn. And actually, we can see that the demand for restructuring service may actually increase during the economic downturns as businesses are suffering. And actually, we can leverage on the current customer base in actually providing this adding value consulting service to them to help our clients to build a better business. Although there's some risk concerning that there will be divert of resources, but actually we think that providing consulting service is actually relevant to the core business, because currently HKBI is already providing consulting service to their sellers and buyers. And now we are just expanding this business to clients that is SME that is going to have suffer a problem. And also this will be important to grow our future client base. Secondly, is try to expand into a new emerging market in Hong Kong, which is the social enterprise business. For information, social enterprise is actually a business with a social mission, and actually it's a really growing business, as there are really renowned social enterprises in Hong Kong like that in the dark. And actually, this is a competitive advantage of HKBI, as we have a strong network and we have an SME expert. Although we may encounter some risk in terms of uncertain market and alignment of social vision of the new owner. And lastly, we would like to consider the expansion into the China market. And we can see from this statistic is that Shenzhen is a really good place as a pilot to expand into the China market. And we are not actually recommending to HKBI to expand at this moment of time, but in the long run, in order to secure its business and to expand its business, we suggest that Shenzhen is a first choice destination for HKBI to enter into China. Now I hand over the time for Ricardo to summarize our presentation today.
Really quick summarize. Are you excited about the business? Go for this one. We're going to restructure the business to make it better. Thank you very much.
You mentioned about one of the plans is not to invest its own money in the property market. But on the other hand, the company also plans to get into the private equity business, which means they will take on a company, restructure the company, run the company, and then sell it back.
Correct.
Isn't there a conflict or inconsistency in there? You will invest more money in a private equity business. You will run the business which you have not your core competency. At the same time, if it doesn't turn out right, the losses are much, much higher than in brokerage business. So how would you balance the two of them?
Yes, I will take the question. So basically, if you want to go into a business, you should first consider whether the market is profitable or not, and then consider whether you have the expertise or not. So as we have obviously seen in the markets, we have more buyers than the suppliers, and we have a very fluctuating entrepreneurs in Hong Kong. So we believe by going into these markets, we have the demands there to purchase the company. And then the second question is, after purchase, whether we have the expertise to restructure the company and adding more value and sell it at a higher prices. First of all, Mr. Lee comes from investment banking background, and he has been in this business for a very long time, roughly a decade. And he knows what kind of, after buying and selling all this company, we believe that the team have better knowledge in identifying what kind of company is good, what kind of company is falling, what kind of company is more sustainable. And also, they know that what kind of company is underperforming because of the management team, so they can buy out the company, restructure the management team or restructure the business, and then sell it at a better prices. And this is what it has been doing, although on a non-position basis, meaning that it doesn't take that company, but they do offer these consulting services to the clients. So we believe that have the expertise. And on the last aspects, you mentioned about the investment costs, differences between the property and the private equity company. We believe that you will want to invest maybe 1 million money in HSBC than in other random banks, simply because that's a better assets, and you have better knowledge about that company. And this is the same for our suggestion. If we have better expertise in private equity, why don't you invest your money in there where you are confident about, instead of spending half of money into some places that you might have better chances of losing it? Thank you.
Thank you. I have a question, please, about your proposal to innovate and maintain your differentiated advantage by providing consultancy services, particularly in the downturn when you believe your experts employed within the business may have free time on their hands. Currently, I think I perhaps have two questions. Currently, I believe, as part of the business model, consulting services are provided for free to sellers.
Right.
And so I would like to explore how you're going to move that model from being a free service to one that you're going to charge. And also I would like you to please explore for me your focus. You didn't talk about changing your focus from the small sort of SME type of business. So these people, and yet you're expecting these companies will have free cash flow in a downturn to pay for consultancy services. Could you please talk about those two things for me?
Okay, I think I'll take the first question about the consultancy service. Is that because our team is dedicated to explore new business opportunities for them, and in terms of the downturn, we do see that there's a capacity of the consultants in actually able to provide consulting service. And actually, although we are providing consulting service to the seller and for free, and also post after sales service, but then after 2 years, this service will be terminated, because that is after the sales contract. However, we do see the opportunity that we can actually prolong this consulting service to our client, and actually after the 2 years after purchase period. And we believe that because of the trust and the confidence we have built between our clients is willing to take our advice and to pay for a fee in order to further enhance their business, especially in the downturn when they are facing great difficulty, and which we have proved in the past that we are able to help them to solve this problem.
And just 2 more little points to add on. First of all, we are providing the consulting services as a standalone business. That means is that it will be a new business initiative, and our existing business model based on commission fee will be continued. And it's only provided that our existing business doesn't have sufficient volume to help generate enough salary and keep the company running. We will start a new business. As we put it there, it's a business plan and business initiative in places not to be implemented immediately. And secondly, to add on to that, because we have the expertise and experiences, we're going to identify the company. If the company has sufficient money, and of course we can offer them consulting services. If not, if it's a great target, it's a big pie, why don't you use our private equity arm to purchase that, restructure that, and sell it later, instead of only providing consulting services? It can be more lucrative, but depending on the cases. Thank you.
Something for you to think about or try to answer is that now you offer consulting services for this very grassroots type of people, which I don't know whether they will buy in. Have you ever considered to, okay, you offer this type of service, and if there is an increase in revenue for the business, so you charge a percentage on the delta, right? So you offer the service first, and then you reap the result. Okay. Another is that doing the due diligence is a very time-consuming thing. Okay, so the more business you have, then you will need to have more staff.
Right.
So
exactly.
Basically, this is the type of business. Have you considered increasing the value of the transaction, or instead of concentrating in this type of smaller businesses, can you go a little bit up market? Because the time to do the due diligence for a $500,000 sale and a 5 million or 10 million sale, you do the same thing, but you charge the same amount of commission. I mean, as a percentage.
Okay, I'll first take the question about the consulting fee. We don't suggest to take on a commission basis based on the performance only, because actually, if we really take on only based on the performance, we will tend to suggest short-term solutions which only boost up the revenue in the short run. However, we may not consider the company business in the long run because we are charged based on the commission. So so this provides a bad incentive to the consulting service, and also is the consulting practice to charge a fee in order to provide a really good long-term solution to the clients.
Yeah, and also add on to that, actually the existing consulting business practice is some company actually have equity base. That means if you meet the targets, we'll have certain percentage of equity. They not only solve but it's mainly commission fee based. That only solve the problem what Jimmy has mentioned, but also provide long-term incentive for a consulting company to offer better services. And may I beg your pardon for the second question?
The second question is, doing the due diligence is very time consuming.
Got it.
Yeah. Whether you do a $500,000 transaction deal or 5 million or 10 million, you do the same thing. So ever consider to move up market?
Right, we do discuss this before, and as fortunately and unfortunately, I will end up in some company who doing this kind of services. And of course, if you are doing a multinational, which was a several million or several billion business, you're gonna need a whole team to do a due diligence. It's taking much longer time. But if you are staying on an existing business, which is around 500,000 Hong Kong dollars, is most likely they're gonna have several shops. You can step into the shops, see how they perform, and that time consuming and that kind of level of talents or expertise required will be way less than if you want to do diligences for example, McKinsey or HSBC, which will be extremely hard because the business is so complicated. Yeah, we definitely value that due diligence process might be similar for different company, but the level of talents and the cost of hiring such kind of talents will be very different. And also, that's not our expertise in the past decades. So we suggest that for the time being, since this market is still growing, we think we should deepen our roots in this market, grow stronger, and then we might consider that as a next step expansion strategy. Thank you.
So it's almost time anyway. So if there is no more question, we'll end the Q&A session. Thank you, judges. Thank you, the University.
Thank you very much.
We'll leave the room to the judges for deliberation. Thank you for coming.